Thank you for joining us and welcome to the 2022 WSWA Holiday Trends webinar presented by WSWA SipSource and Access Craft Programs. Thank you to our sponsors for today, Oracle NetSuite, Inventive, and 365 Wine Trade. As many of you know, SipSource is the only suite of tools leveraging aggregated and trended wine and spirits distributor depletion data in the industry. Today, we have two of SipSource's most valued assets joining us to provide what's hot and what's not, wine spirits trends moving into this holiday season, what categories will lead the way during the holiday celebrations and into 2023, what does the SipSource CSI tell us about 2022, both on and off premise, and also the question we all have, and people are feverishly texting me about, are Danny and Dale bullish or bearish on this holiday season? Is Santa coming to visit, or is the Grinch going to steal Christmas? And for the first time in the 3 years we've been doing this program, we have three mixologists who will join us at the end of this webinar to share some of the trendiest cocktails for this holiday season, made with a few brands from WSWA's Access Craft Program. The WSWA Access Craft Program is now in its second year and has grown to be comprised of some really talented wholesaler advisors who are experts in building craft brands, along with some of the most unique and promising craft brands throughout the country, as well as consultants who are owners, operators, and ambassadors for their startup and small production wine and spirits brands. All right, let's get into it. Danny and Dale, take us through a brief recap of 2022 and what we can expect for this holiday season.
Thank you very much, Michael, and thank you to our sponsors. Danny, let's go to the next slide. And for those of you who are not familiar with SipSource, just a quick explanation of SipSource data. SipSource data is an aggregation of depletions from our wholesale members, and you can see the participating wholesalers down there. They supply their depletion data to Vermont Information Processing, VIP, where the data is matched, cleaned, and aggregated up. It's then loaded up into their iDig tool, where we can extract the data and look at trends. Simply put, SipSource is in my opinion, the single best representation of what's happening in the three-tier market. However, as we go through this, Danny and I will be using some other data sources, and we very much believe that trying to bring data sources together and looking at multiple data sources is your best bet, and trying to get that. And over the last 3 years, data has been very much disrupted as we've looked at it for a number of reasons. Right now, I will say, though, we're starting to see data points align, and we're really starting to see that come into view. And we think that going forward, that disruption in the data is going to smooth out, and that the trends and the numbers that we see will be completely representative of what's happening in the market. With that, Danny and I really here are going to focus in on four major subjects. And there are some really, truly unprecedented things that are happening in our industry. First thing that we're going to look at is spirits, the growth of spirits, the explosion and what that looks like versus wine. While there's always been headwinds and tailwinds in economic conditions, and that's always a subject, we are in some unique situations right now that are impacting the category. We've all done very well with premiumization through the years, and premiumization has driven revenue for the category in the long term. However, we're seeing some chips in that armor, and we're going to discuss what we see and where we think that's going. And then there was a significant disruption in channels, and really what's happening within those channels, and how the consumer has switched their buying patterns. And we're going to look at the evolving marketplace and what that looks like. In every section, we're going to look at what's ahead. And as Michael pointed out, we have the Santa and the Grinch. During this presentation, Danny and I are going to present facts. We're going to go through each of those subjects. And at the end of every one of those subjects, we're going to do a little role playing and try and be provocative. And we're going to look at the extremes on which way could this go. Everybody out there has opinions on where things are going and what it looks like. And in about 8 weeks, we're going to have the answers as to what this holiday will look like. It's coming upon us very, very quickly. To get started, though, Danny, why don't you walk us through what's happening with the consumer?
Thanks, Dale. And again, thanks to our sponsors. Thanks for everyone who's listening. We always like to start with who's really in charge. And at the end of the day, it's really the consumer. And the more we meet consumer needs, the more successful we'll be. And those consumer trends, they'll continue to drive market changes. If you look at them, I'm not going to go through each one by one, but many existed to varying degrees pre-COVID, but COVID actually accelerated some of those trends. We'll touch on some of these during the next 45 minutes. Certainly the first one, we know that more consumers are becoming total beverage alcohol consumers. They're choosing different drinks right across the entire beverage alcohol spectrum, depending upon the occasion. Boundary lines are quickly dissolving between categories. Consumers are choosing different things at different times. There's different companies, different competitors coming into the field, and things are getting really blurry in the total beverage alcohol industry. So we will touch upon all these as we go through. That's why I'll leave it up here for another 30 seconds or so. And then I want to just talk a little bit about what we're seeing generally in terms of trends this year compared to last year. Recognizing that last year, 2021, in my opinion, was an anomaly year, especially for the high end for the various wines and spirits segments. 2021 was really an outstanding year for those higher end wines and spirits. Part of it is that there was restricted spending on services like travel, out of home entertainment, things like that because of COVID, but there was hyper spending on stuff. So I would say stuff including beverage alcohol products over service spending in 2021. Also, there was a lot of money coming in to consumers and businesses through government monetary support last year and in the back part of 2020. High-end wines and spirits were purchased at store prices as opposed to people going out as much to restaurants and bars and spending obviously higher amounts in restaurants and bars because of the margins there. Whereas if we look at 2022, now we have much broader spending options, including entertainment, sports, travel. Some of that travels in the country, but some of it is out of the country, obviously not included in the numbers we're showing. Business-related travel and spending is not fully back yet. It's coming back, but it's not back to where it was pre-COVID. And then obviously we're all aware of the broader inflation squeeze on many things that are just fundamental to how we spend our money every day. And along with that is the government reaction and rising interest rates, creating even a greater squeeze on consumer wallets. So part of the growth rates in 2022 are impacted by the outstanding growth rates the year prior. It's created very tough comps. I would just also say that because of that, if we're looking at year-on-year growth, 2022 versus 2021, at any level, it's still very positive given that it's going against really high levels last year. So with that, let's just look at sort of the big picture. And this is the SipSource data for wines and spirits on top in green, wine in red. And then thanks to our friends at the Beer Institute, there are the beer depletion numbers in the gold in between. We're showing 12-month rolling through September 2022, and then on the far right-hand side, just the latest 6 months. So a few different things. Obviously, over the longer term, it sort of falls into three buckets. Spirits growth on top, wine growth towards the bottom, and then beer plays that kind of middle role, sort of right in the middle, bridging the gap almost between the two. Spirits has been well ahead. Let's go back to the comment I made a minute ago about the really high growth rates of last year. That was certainly the case for spirits, with volume growth rates almost reaching double digits. So that's come down a fair bit. Part of that is because of what we're comparing against. The other thing, and we'll touch on this as we go further, if you take spirit RTDs out of that green line, that 3.4% becomes 0.9, that 0.2 or flat becomes minus 3.1. So ready to drink premixed cocktails within spirits are certainly a major driving force. And we're going to tear into some of these numbers just to sort of look at where the growth or the lack of growth is coming from within those different segments. So Dale, how about you start us off and take a look at spirits?
Thank you, Danny. And for many years, what we have seen is that wine and spirits trends, by and large, followed each other. There were outside forces and outside impacts that were driving ups and downs. However, when we go back into early 2018, we started to see a separation in trends between wine and spirits, where spirits were going up, continuing to grow, and you can see that on the left-hand side of this chart. And wine was going down. Per Danny's previous slide, we know that beer is pretty steady as it goes through. So this was pointing out that spirits was likely stealing share from wine, and that consumers in today's world, where consumers are total beverage alcohol consumers, that more were choosing spirits. And that trend really went on until the pandemic. And when the pandemic hit, we saw that huge spike there in wine, where panic buying kicked in, and we saw a lot of pantry loading, and that quickly faded though. And we see that with the start of 2021, we started to see that return to the bifurcation of trends, where spirits really took off and wine was going down. We see those are starting to even out. However, it's important to notice that in the SipSource data that from 2017, the spirits category has gained 740 basis points of share, which is tremendous. And with spirits continuing to outgrow wine, we're going to see spirits take on a bigger and bigger share of throat within the beverage category. Next slide. What's driving that? And Danny pointed out that premixed cocktails are doing very, very good. And we do know that there are two categories that have driven most of that growth. Premixed cocktails and tequila and agave-based spirits. I should take a second to explain the charts. You'll see a number of these. The bars represent the share of the category listed, and the dots represent the trend versus last year. So you can see premixed cocktails in the latest 12 months are up 27%. Tequila, agave spirits growing at 12%. And especially for tequila, that's really, really happening at the high end. If we look at this on a long-term basis and we see what has happened with share, we can see what impact that has been. And we see here that premixed cocktails since 2018 have gained 9.3 share points. So huge growth. And that has exploded not only in retail, but it's really carved out a place within the on-premise that we think is very interesting. Tequila has gained 2.4 share points. That is significant. And if it wasn't for that huge cocktail number, we would really be talking very big about the growth of tequila and what's happened there and the way that it continues to grow. With that, we know that there's always going to be a category that loses share. And we see that vodka is down and has lost in that time period 4.8 share points. However, what we also know is that base alcohol in those cocktails matters. So if you could, Danny, can you tell us what that picture looks like and how that might be impacting these categories?
Yeah, so one of the things we looked at here, thanks to our friends at Nielsen IQ, is we looked at within the RTD spirit space, we looked at what the base liquid is. So the green bars represent the share of base liquid within that RTD spirit segment, with a large portion, almost 60%, being vodka, which goes back to Dale's point, is that could be a driver in reducing the growth rate of mainstream vodka that Dale showed us on the last slide. If you go to the bottom, you'll also see the dollar percent change versus a year ago for all those various RTD base liquids, vodka, followed by tequila, then rum, etc. All of them, almost all of them being very healthy growth rates, obviously. The one thing that I would comment on, even though tequila is well behind vodka as the base liquid, part of that is the largest brand within RTD is High Noon, which is vodka based. So that's a major reason for that vodka number being so high. But in looking ahead, I also think that tequila RTDs are poised for an explosion in 2023 for a number of reasons. There's a number of major manufacturers that are now rolling out a tequila-based RTD, and some of those are beer companies doing that, as well as spirit companies. And there's a large number of other announcements that have been made over the last month or two talking about what's to come. And almost all of them, or a large portion of them, I should say, have been in that tequila-based RTD segment. So look for big growth in that segment over the next several months into 2023. The other thing that I think it's worthwhile to note is that the RTD spirits segment is a bit less concentrated than is the case for hard seltzers from a brand perspective. So here we're showing based on Nielsen numbers, the top 10 and then top 20 brands within each of hard seltzers and RTD spirits and what percentage of the categories they represent. So for instance, if we look at the top 20 brands of hard seltzers are almost the entire category, 97%, whereas the top 20 within RTD spirits is significantly less, still high, but significantly less at 83%. And when I looked at that 83%, I think it's an interesting mix in that obviously one of those brands, the leader is High Noon with 36% of the category. There are 9 brands of the 20 that are owned by big spirit companies representing 18%. There's actually 5 brands in the spirit RTD segment owned by beer companies that represent another 18%. And then there's a number of smaller, kind of more independent companies to date, 5 brands that represent 12% of that within that 83%. So it's an interesting mixture of where that comes from, of where the 83% comes from. And I'd expect to see potentially some consolidation over next year, potentially some more M&A activity, especially as some of the bigger companies look at some of the smaller companies and what might be attractive to add to their portfolio. Dale, so we've kind of taken a look at spirits. How about if you take us back through some wine numbers now?
Yeah, and as we said, the wine category really has had a difficult run and has struggled. And other data sources that we use are certainly pointing to this, and we see a consistency here. Sparkling wines have outperformed. So sparkling wines have done actually very well. And that's been led by Prosecco. Prosecco has been an absolute animal in staying consistent and growing strongly for the medium term and probably even into the long term, where we see that growth rate. And the 7.1% growth rate right now is one of the lower growth rates we've seen on it. Sauvignon Blanc has reemerged, and Sauvignon Blanc has done well. But we know that this isn't necessarily the story, that there's more to it. And while the total category has been down around mid-single digits, we do see also another split. And on the next slide, we will see that the wine category has broken out by price, and we have seen lower end, lower priced items really struggle and have lost significant volume, and especially as we can see here, those items below $8, and that has trickled into the $8 to $11 range as well. And we've seen very good growth at the over $15 range. We're now starting to see those trends kind of regress to the mean, where we're seeing the lower end items kind of come back down. The trends are improving on that. They're improving slowly. And we see the high end trends pulling back a little bit where they're not going to be as positive. We expect this to continue. Don't get me wrong, the value wine business is not going to grow. That is not at all what I'm saying. We expect that to remain in the negative. We just think it's going to be less so, and that we're going to see those trends come down. A lot of that driven just by how soft the comps have been for the last 2 years. The segment I'm really going to watch in these inflationary times is that $11 to $15 range. That's a big segment. As you can see, it's about 15% of the volume that is done. There's a lot of consumer interest in that. They have been moving up and trading up. So I think it will be interesting to see what happens within that price range. And that's what we're going to be watching over the next, certainly during the holiday season, to see what happens with that. Another area where spirits have really outperformed, and this goes back to that pre-mixed cocktail. And this is just looking at package type and what is happening with package type. We all know that glass is by far the biggest package within the wine and spirits industry. PET comes in pretty strong for spirits, and then box wines within the wine category. However, you can see what's happened with and canned spirits driven by premixed cocktails have exploded. And we see that 50% growth rate where cans for the spirits industry right now represent 8% of all volume, where in the wine category, that that is 0.8%. So the canned category and alternative packaging just really has not had the impact on the wine side that it has. As consumers look for different usage occasions, they're turning to that pre-mixed cocktail and with with that canned product. With that, as we wrap up this section, Danny, what is your view of the future as it relates to wine versus spirit trends?
So we would like everything to be on the Santa side of things. Everything. I mean, that would be the desired outcome. But I think that spirits will continue to succeed and grow faster than wine for a few different reasons. One is just the broad consumer base, the broad demographic base. Underlying spirits is just broader than it is for wine. And they're doing a much better in appealing to younger drinkers as well as the multicultural segment, and a lot of crossover between the two. A lot of innovation within the spirits category. If you think about every drink could be potentially a new drink, lots of diversity in terms of types of cocktails and so on. And our mixologist, I'm sure, will show us some of that. So I think that's just built for that sort of longer term growth, compared to wine, where just a huge portion of the volume is still done under that, say, $11 or even $8. And that's really struggling, as you pointed out, Dale. The one thing I will say, though, is over the next 6 to 9 months, I would look for much lower growth rates for spirits than we had seen last year. The comps are just really high. I don't think it's sustainable. You're going to get 8% on 8% growth. So I think that's going to come down to those lower single-digit levels, and then if you took RTDs out of it, probably even negative. What do you think?
I'm not going to go so far as to say that wine is going to come back and outperform spirits. I don't see that happening. However, and you mentioned tough comps for the spirits category, and they really do have very, very tough comps coming ahead, where the wine category has such soft comps. So I really think we're going to see marked improvement in the wine category trends over the next 6 months. I think the holiday is going to be strong for the wine category. I think we're going to see some good improvement there. And I think that trends will improve, and we'll start to see this normalization where we'll get back to more stable trends within the wine category, and would expect that really to get back to where it's instead of being down mid-single digits and above, it'll get back down to where the volume is going to be much, much closer to low single digits. But spirits are still going to win consumers as we move forward.
So we have mild agreement on that one then.
Mild agreement. Yeah, that's the one that we couldn't go too far on. With that, Danny, why don't you speak about economic conditions?
Yeah, so I mean, we're all aware of the broader economy, and I've just sort of grouped these things on the left-hand side, sort of some better numbers in comparison to the right-hand side being, much scarier numbers. So for instance, inflation is much higher for outside of beverage alcohol than it is in beverage alcohol. The employment situation is still unlike previous years when we were heading into recessions, even if we're not there classically yet. The employment situation is much better now than it was way back then. GDP grew in the last quarter. So there's kind of the good things on the left, the not as good things on the right-hand side. If we focus in just on inflation, and these are inflation numbers from the government released Bureau of Labor Statistics from January through to September, month by month, a couple of things. One is the alcohol numbers are in no way at the same level as over the overall increase in the consumer price index, and driven by, in large part, by food, which is up in those double-digit ranges. Within alcohol, a couple different things. One is that beer price increases have been significantly higher than spirits and wine. That's the first thing to note. Excuse me. Second thing is that in the case of food prices, food at home increases have been much higher than away from home, but that's the reverse for alcohol. Whereas away from home, called out the on-premise increases, have been higher than at home or store-bought products. So it looks to me like on-premise operators are raising prices faster than the supplier and distributor price increases that have been taken. If we go a little bit further into wines and spirits, and in this case, I looked at various item by item prices this year compared to a year ago, broken down by price tier. And there's some consistency between spirits on the left and wine on the right, and that is the higher you go in terms of the average price, and these are average prices per 750 mil, the price increases tend to be higher. So suppliers have taken larger price increases on items at those higher price tiers than those in the middle. The one exception to that is in the wine category, that $10 to $20 sector, which is a big piece of volume. It's really competitive. It looks to me like maybe some folks are a bit nervous about taking price there, and how the consumer might end up, because of that, if they did, switch into something else. So that range of increases has been lower than the other increases that we saw in the table wine category. So if you take it all together, and this is again from our friends at Nielsen, and you look at dollar growth rates versus volume growth rates, dollars in dark blue, volume in light blue for each of beer, wine, and then spirits, including RTDs and excluding RTDs, the beer price increases, which have been more aggressive, have contributed to it leading the dollar gain. So the dark blue for beer is much higher than it is for wine or spirits. There's a significant larger difference between dollar increases and volume increases for beer at almost 5 points compared to wine and spirits. And then within RTDs, it really makes a difference whether within spirits overall, it really makes a difference whether RTDs are included or not. If they're included, it's actually a depremiumization factor where volume is growing faster than dollars by 2.8 points, whereas without RTDs, you get back to the classic premiumization being evident in the numbers with a 2-point difference between the two. So over the long term, if we look at category growth rates, and this is just off premise in the Nielsen numbers, beer and spirits now are running at about the same level of overall dollar increases, with wine trailing. And if we look at the difference between dollar change and volume change, beer is way out in front, as I mentioned, more aggressive price increases. Wine and spirits, including RTDs, excluding RTDs, are running around the same level, but excluding RTDs, that's that dark green bar, you can see the volume increases growing faster than dollars, leading to that negative differential between the two. So a lot of interesting things. Dale, I don't know what you think about, like if we look ahead to the next 3, 4, 5, 6 months, is the economy going to still be a headwind? It's going to improve? What are your thoughts?
Yeah, and I am not an economist. I never played one on television. So for me, though, I think just looking at the next 8 weeks as we head into the holidays, I think we're going to have a really strong holiday. And I think that as we think about where the holiday goes, consumers have had 2 years being pent up with very, very significant COVID impacts, and I think we're clear of that. Knock on wood, that we're not going to see that this year. So I believe that we're going to have a really good holiday, and that I think will put some positivity into it, and that we'll see good growth. The economy is challenged. There's going to be reasons why it continues to be challenged, but I do think that a consumer base is ready for a strong holiday, and that they're going to drive a very, very strong return across channels for our category.
Well, bless you, Stratton Santa. Let me take a slightly different view on it. I think it's going to be tough. I mean, I just think the inflation is just pounding people. Every time we go to the gas pump, we're really aware of it. We both live in California, you know that, as do I. Even if we're not in a recession classically, I think a lot of the consumer mentality is around recession. We see things like, not specific to alcohol, but we see things like trading down to private label, going to more value retailers, things like that. And any time that consumers are stressed, they start to they start to behave a little bit differently. That could mean they're not going to restaurants as often, or trading down a little bit. So I would say it's going to be tougher than you're portraying. I would also say that beverage alcohol tends to be, we've always used the terms recession resistant, recession resilient, whatever you want to call it. And so we'll end up being better than a lot of other categories, but I just don't think it's as good as we might have hoped for had things kind of not gotten out of control a little bit, where people are just pressed economically, especially for those sort of in the middle to lower income. Again, thankfully, and for many of our categories and segments, higher income consumers are sort of the core, so they're going to be a little bit less impacted than other consumers. Okay, how about we move into
a lump of coal for you on Christmas morning?
Okay, I'll take that one. Again, we're just being provocative, so I'm going to go out and spend freely, but I don't know about everyone. All right, let's talk about premiumization, Dale.
So the first question, of course, is do in fact consumers premiumize during the holidays? We're heading into the holiday, and what do we expect? So just went and looked at spirits over $25 and what is their share during different quarters. And as we can see here, for the last 3 months of the year during the holiday season, the share of $25 and over is significantly different. So we do know that consumers premiumize and that they do in fact trade up during the holidays. The same holds true for table wine, is that we will see on the next slide that holds true as well within the table wine category. So as we think about premiumization, we will expect to see it. We'll continue to see it this holiday season. This holiday season, I don't think is going to be any different in that the consumer will stretch their wallets and will continue to premiumize. So within that, I do think we'll see a jump in premiumization. However, setting the base for that, Danny, what is happening with that so far this year, and how has that changed by different segments?
Yeah, and I'm going to show you the slide in a second, and I'm going to ask you to, or remind you of what I said earlier on, that last year really was a bit of an anomaly in terms of the huge growth rates we saw, especially at the high end. So what I'm showing here is table wine on the left-hand side, spirits on the right-hand side, with different price tiers going from the low end to the high end in each case. And then the year-to-date growth rates 2020 through September 2022 versus what those growth rates were in 2021. And we can see how much the growth rates have dropped at that higher end from where they were. But let me go back to what I said. Any growth on top of those high growth rates of a year ago, or even small negatives on top of those large growth rates a year ago, still puts us in a much better place than we were, compared to 2 years ago. $50 plus for spirits is actually even an exception to that, in that we're seeing 10% growth rates on top of a 38% growth rate. The other thing just to point out on this slide is that, and as Dale mentioned, for wine, the lower end is really struggling. You can see those growth rate declines for this year, -9 for less than 11. That's on top of a -11 last year. Whereas in the spirits category, that lower end isn't impacted anywhere near to the degree that spirits is, which has been another reason for spirits doing much better than wine overall. So Dale, I've kind of showed sort of the broad from less than 11 to the $50 plus. Can you break down sort of the over $25 segments within spirits in particular?
Yeah, and when we look at that, the question becomes what's really driving that over 25, and it's tequila and agave-based spirits. That the share of their share jumps so dramatically. You can see over 20% of all products sold in spirits over $25 is tequila, followed closely by U.S. whiskey. And those have good, strong, robust trends. We expect those to continue. These are year-to-date numbers. We do see that there's a couple of categories that have drug it down. We know that cognac has had a tough year after some very strong growth rate for a couple of years. But growth rates on the $25 and over are basically strong across all categories. But the driver really is tequila and U.S. whiskey. And Danny, can you take that down and give us a little bit more detail on what that looks like by price point and segment on who's winning and losing?
Yeah, so it's kind of like if you put the two things together, the segments and then the price tiers. We looked at what segments and price tiers within those segments have grown the most share, and which segments have declined the most this year compared to last year. So let's look at the left-hand side, and I'll just call out a couple things. 8 of the 12 different segments that are here are over $25. To Dale's point about that being a pretty strong sector overall. 8 of the 12 are on the right-hand side are under $17. So you see the extremes on what's growing and what's not growing. On the left-hand side, 4 of the 12 there are tequila, starting from 25 to 50, but we see 50 to 100. We even see less than 10, maybe more for the well as on-premises come back. And we even see vodka that it's not done well overall, but 2 of the 12 segments on the left-hand side are actually vodka segments, 17 to 25. I'm sure Tito's is a big part of that, and then 25 to 50 also growing. So I think that just puts in, takes both price tier and segment, puts them all together to show the big winners and the ones not doing as well. Let's go back to wine, Dale. What's doing well in the $15 wine business by varietal and type?
And by and large, most things, as we see here, and really all varietals, most varietals, and we can see we have sparkling other in here. And so we're seeing good growth amongst most of these segments, and they're doing quite well. Sparkling other, and within SipSource data, sparkling other is basically all sparkling wine that is not a Prosecco, a Champagne, or a Cava. So be it imported or domestic. So interestingly, that's a segment that has been doing very, very well. We're heading into the holiday season where we should see a spike in that. That's really the question to me, is will we see that spike for sparkling come out, and will that have an impact on the overall? But we expect to see premiumization continue within the wine category, and we expect to see that over $15 price segment continue to grow well. With that, Danny, give me your view on the future of premiumization.
Yeah, as part of that sort of future, I just thought this was interesting because what I did here is look at within each category, beer, wines, and spirits, what percentage of each category's volume comes from the low end versus the kind of the middle versus the high end. And you can see some of the definitions I used for what's considered high end, middle, and high, low, and middle. The one that really sticks out to me is that 57% of the wine volume is less than $8, whereas the low end for beer is more like in the 20% range. The low end for spirits, if we define that as under 10, is in that same range as beer, so 22%. So the struggle for wine, as we've been talking about, is the premiumization totally makes sense. It's where the other categories are. It's not necessarily a bad thing. It's probably a good thing, and that's the way that trend is going. It's just that they've got to work off that really large amount of volume in that under $8 category, which is a bit of an albatross right now to category growth. So in terms of what's ahead for premiumization, I think long-term that's built in. It's really, for me, it's a matter of how fast that happens. Like I said, 2021 was kind of a banner year. That slowed down in 2022. And then I think all those inflationary factors are still going to be a bit of a drag on the level of premiumization. So I think it's still happening and going to happen, but I think it's going to be slowed down by some of the economic headwinds. I don't know, Dale, Santa, Grinch, what do you say?
I'm going Santa on this one, Danny. I'm going the other way. That again, I'm very, very bullish on the holiday. I think we're going to have a great holiday, and I think that the consumer is going to trade up even more so this holiday season. The high end consumer is less impacted by the factors that we're talking about. And yes, while gas prices remain high and inflation is kicking in, really, when we start thinking about that luxury consumer, they are a bit insulated from that. So I think that they're really going to splurge this holiday season. We came off the summer of travel, going everywhere. I think this is going to be more about staying local, supporting local retailers, and really going after celebrations with family. And I think that we'll see consumers really trade up. And I think we're going to have a good, solid 2 months here on premiumization. As we head into January, February, we'll see where that goes. But on the short term, I think it's going to be very strong.
I hope you're right. Just a little bit less optimistic. Okay, let's move on to how the channel how the channels have evolved over the last couple of years and where we are now.
We know that COVID has really had such a significant impact, and on the left-hand side, we see trends for the wine category and spirit, and on the right side chart, that's trends for the spirits category. And when COVID hit, we saw the immediate drop in on-premise sales, but we saw that very strongly offset by an increase in retail sales. As the on-premise sales have moderated and are coming back down to normal levels, we're just not seeing retail kick in. Inventory management has either been difficult or is a very big concern for people out there. So we're just not really seeing that happen. Danny, I know that you have done some great work in tracking what is happening with the channel split between on and off since COVID. Why don't you tell us what that looks like?
Yeah, so here's a picture, and let me describe a bit the picture. This is based on an index compared to what the on-premise share was pre-COVID. So if we index that on-premise share for each of wine and spirits at 100, and then track how that's evolved during COVID and now as we come into the most current months, these are 12-month rolling numbers up until when you get to the right-hand side. I've looked at a more current 3 months. We can see that the devastation in the on-premise because of COVID, and then things have started to come back, and we were getting to the point around May of this year where we were almost back to where the on-premise share for each of wines and spirits was back to where it was pre-COVID, and then kind of we hit this, I'll call it a speed bump, and we haven't been able to fully recover back to where things had looked like they were going to, and I think I would surmise that broader inflation is impacting the full extent of an on-premise recovery. To me, that kind of makes sense. I think there's some other factors that we're going to touch on in a couple of slides that's kind of impeding the on-premise getting back to where it was. And by the way, I've included some beer numbers on the bottom. That's in a similar situation. In the on-premise, beer is not back to where it was pre-COVID either. Now, as the on-premise had recovered during the last few months or the last year or so, and Dale showed those really high on-premise numbers, some segments have really benefited from that. And as it slowed down, or as it slows down, some of those same segments that benefited from the huge recovery are also going to probably see some slowdown. So these are categories and segments within each of spirits and green and wine and kind of the pink that where the on-premise does more than 20 or contributes more than 20% of those segments business. Way off to the right-hand side, you've got categories like mezcal or $25 plus table wines or cava and sake, where over 40% of the business comes from on-premise. So as things have improved in the on-premise, but then started to kind of stagnate a little bit, those segments have been benefiting or not benefiting from those headwinds and tailwinds in the on-premise. One of the things, obviously, we've talked about ready-to-drink cocktails, a lot of interest in that segment because of its growth. Within the on-premise for ready-to-drink cocktails, while the on-premise overall for spirits about 20%, that's actually 18.7 right now, of the business comes from the on-premise. For RTD cocktails, that's much less. It's only 11%. It was actually only 4% pre-COVID, so it's gone from 4% of the on-premise has gone from 4% of RTD spirits to over 10% now. But if you go with a little bit deeper within the on-premise, you take the on-premise channel as 100%, there's some interesting dynamics for RTD spirits. So for instance, the recreation channel, which is where things like stadiums would be and golf clubs and private clubs, etc., theaters would be, do significantly more business for RTD spirits than than spirits overall. Same with that other on-premise where you've got offices, for instance, or concessionaires, etc. So there are some interesting dynamics for RTD cocktails within the on-premise, places where it's going to do better and also places where it's not going to do as well. And I'm sure consumers might like a handmade cocktail, not a premix. I'm sure the mixologist would rather make a cocktail for you than serve up a premixed cocktail. So there's some headwinds and tailwinds. Dale, I think there's some other on-premise dynamics that we should consider, and what are some of those?
Yeah, first and foremost, I think it's really important that we know that a number of on-premise outlets had to close and were closed during the pandemic, and we have seen some of that recover, but still, it's not back to where it was. And this is from VIP's outlet database, and when you look at active accounts, it's still down about 7% from where it was pre-COVID. It's still a struggle. That this is very, very difficult out there. Labor shortages are impacting them. There's a lot of factors that go into it. Right now, we do see within sub-channels within this that fast casual and premium bars are actually increasing accounts, where the losses are coming in quick serve restaurants, fine dining, and then casual dining and nightclubs are struggling as well and are showing more closings than openings. Also, the other thing, and Danny, I think you found this from a company called Data Essential who did some work, is that reduced hours. And this is where that labor factor comes in. And the net of it is that according to their research, that the average on-premise account is open 6.4 fewer hours per week than they were pre-COVID. So we know that is happening. I think many of us have shown up at our favorite restaurant hoping to get something and notice that they're closed on Monday where they didn't used to be. So the managing of hours and just reducing time open is also impacting the on-premise. Danny, can you go just a little bit deeper on what's happening within channel shifting?
Yeah, so let's look at on-premise for a second, because Dale talked about on-premise as kind of in totality, but if we look at the different pieces within the on-premise and look at share, and this is wines and spirits together last year compared to this year, the channels that have gained the most share are the recreation channel, again, things like casinos, theaters, stadiums and arenas, theme parks, golf clubs, etc. They've gained, as well as other sort of travel-related sub-channels, which makes sense given that travel is at much higher levels now than it was a year ago. So we see that within the lodging channel, within the transportation channel, whereas the dining channel has given up 3 points of share versus where it was. And Dale talked to a number of outlets that have closed, also fewer hours, staffing issues, et cetera, et cetera. If we take another different view of that, and this is within the on-premise, and this is more of a long-term view, share of within the off-premise only, share of wine by channel, share of spirits by channel, and I've ranked them based on which channel's the most important, the second most important, et cetera, down the list. There's a couple of things that stuck out to me. One is the drug channel is just really suffering. It's kind of losing its place within beverage alcohol, as well as mass merchandisers to a smaller extent. The grocery channel and the C-store channel has gained. And if I think about the grocery and C-store channel, at least within spirits, that also aligns with RTD spirits being the best developed within grocery stores and convenience stores and growing the fastest in those two channels. So there's probably that's no coincidence that's also leading to the grocery and C-store channel doing the best in terms of share growth within the spirits channel, within the spirits category rather. So I think we've talked a lot about channel shifting and so on. Dale, if we sort of broaden the look at regions instead, have you seen any differences in regions across the country when we talk about on versus off premise?
You bet. It was very interesting. And we know that states in the South Atlantic and the South Central really were opened much, much earlier than other parts. And certainly the Pacific and Northeast were much, much slower to open up. So as we look at regional trends for the on-premise, we now see those comps are coming through, where we see the Pacific and the Northeast are growing much more robustly than the South Central and the South Atlantic, where this will even out as time goes on. But I do think it was an interesting way to look at it. The other channel that we should probably just acknowledge for those in the wine business, Danny, is direct to consumer. Can be very important for some wineries. How is DTC doing?
Yeah, so DTC, it's an important channel, like you said, Dale, for wine. We know that as a result of COVID, DTC shipments certainly spiked as tasting rooms and so on closed or reduced hours, etc. Now we're looking at year-to-date 2022 versus maybe some higher numbers in the prior year. And if we look at the right-hand side, we're seeing that dollars are flat, basically, and volume is down considerably. I think some people that might have been driven to the DTC channel have now gone back to their normal behavior, shopping through three-tier channels, for instance. But if you take apart the year-to-date numbers into the price ranges less than 50, 50 to 100, and $100 plus, I mean, it really comes down to everything below $100 isn't doing all that well, but you get to that $100 plus bottle of wine, and that segment has done quite well over the last year, up 25% on dollars, and it now represents 30% of that DTC channel. So there's a bifurcation there too in terms of the kind of the lower end of DTC versus that really super premium end of DTC. So one last slide on this section, and we're getting ready to wrap up. Dale, I know you've done through the Wine Market Council some interesting research on the main issues on the minds of the trade and how that's changed over the last year that you can take us through here.
Yeah, and we did a study last year. We repeated it this year with using Wine Opinions Trade Panel, and you can see by the fifth number down, the fifth block down there, COVID is just not the concern that it was. A new COVID variant, where last year at this time, 46% of the trade was saying that was a very big concern of theirs. That's now down to 28. However, the things that do remain that are keeping people awake at night in the trade, mostly price increases as inflation comes through, very nervous about that. And while supply chain and logistics and getting product to market has improved, still a very, very big concern for the trade. And we're going to continue to fight that for some time. But overall, the headline here, COVID, much less concern. We're kind of fading out of that. Inflation, economics are really what's driving the concern for the trade panel. So, Danny, last shot for you to be Santa or Grinch on what's happening with the evolving marketplace. And where do we think on-premise is going to go?
Yeah, I mean, for this, I'm going to put up this slide here that actually shows the two opposing kind of points of view. And we're all in this place right now where everyone's out with their predictions about the holiday season, just like we're talking about it. So, on the right-hand side, Morning Consult did a survey and they asked people, you expect to spend more or less on the following categories over the holidays? And you can see, I mean, it looks like alcohol is not going to be very good, where 42% said they're going to spend less, 10% said they're going to spend more, and the other 50% said the same. So that's a really pessimistic view that I think is over exaggerating what's going to happen. Hopefully it's way over exaggerating. Then you get folks like the National Retail Federation, healthy holiday sales, consumers navigate headwinds. And Dale, you've said you're leaning to the left-hand side. I'm leaning nowhere near to the right-hand side, but a little bit more to the right than you are. You think on-premise, people are going back out full steam. I'm thinking maybe not so much. And partly when I say not as much, it's also longer term. I just think there's been a bit of a shift from more things that were out of home pre-COVID to more things that are at home, whether it be streaming movies or getting my meals delivered to my house, even alcohol delivered to my house. More people working from home, business travel not where it was. So I'm not as optimistic about on-premise getting back to where it was even pre-COVID in the long term.
Yeah, and I think getting back to pre-COVID, and you mentioned business travel, and I think that you're right about that. The business travel just isn't going to be back to where it was. Pity the head of sales who has gone to their CFO and pitched the going back to 2018 or 2019 budgets for travel, right? That's just not going to happen. That money has gone to the bottom line. But I do think that you're going to see some holiday parties, you get together, that catering area, you're going to see larger parties try and get together, larger family gatherings, and some of those are going to be on premise. And I think that the biggest struggle for the on premise during the holiday season is, will they be able to staff to meet demand? And that's really going to be the limiter. I think consumer demand is going to be there to go out and celebrate and meet friends and socialize. Just the question is, can those on-premise establishments actually meet that demand. I think that's really going to be the big limiter. So, in general, I think it's going to be a really good, robust 8 weeks here as we look at. I'm very excited about it. And just a little bit, I'm more bullish, and that's not even role playing. That's a real opinion that I think we're going to have a really good holiday. Next January, we're going to have to think about where we are again, because that could be a total reset.
Okay, well, I'll tell you what, if you invite me to your party, whether it's at your home or out of your home, I'm coming.
Bring something, just premiumize, Danny. When you come over, premiumize, please.
I'll buy up. I'm going to leave this slide up. I think it's better if we go on to questions if there are any. The only thing that and you can read what's here, that I just draw your attention to a couple of things that maybe we didn't touch on. The shelf is continuing to change. Categories, segments like hard seltzers, which are exploding, are now declining. They're going to be trimmed back. Where is that space going to go? Craft beer is maturing. Assortment is declining in store. Where's that space going to go? Consider what segments and what categories are doing best in keeping pace with younger legal drinking age consumers, including Gen Zers of legal drinking age, and the changing face of America, the multicultural segments. And then lastly, there's just a ton of blurriness around, I'll call it 3 C's, what consumers are doing, category blurring, and competitors that are in this space that might not have even been in this space a couple of years ago, including non-alcoholic beverage companies that are now having their brand names extend into beverage alcohol through licensing and partnerships. So I know we like to define things in neat little chunks. It's becoming increasingly difficult to do that, and that's increasingly not the way consumers are thinking about it. Dale, anything that you'd want to add?
No, I think you hit it, and I do think, right, that would be, if I'm in the wine industry, I'm very concerned about my shelf space. I think that's a very good call out. That's going to happen, and then the demographics of the country are changing, and I just think that the spirits category is doing a better job of reaching them and bringing them into the category.
Okay, so I think we're at the point where we're going to say thank you. We're going to turn it back to Michael. If you'd like to reach out to us, feel free. Our emails are there. We enjoyed the time. I enjoyed partnering with Dale, as I always enjoy partnering with Dale and exchanging. And Michael, we'll turn it back to you.
Thank you, everybody.
Yeah, Santa and the Grinch. I mean, Danny and Dale, thank you very much for the thoughtful analysis today. Members of the media should email your questions to me. That's michael@wswa.org. If you have questions for Danny and Dale, hit them on their email as they posted. Okay, let's go ahead and throw the registration link for what is to be a very exciting industry event. For those of you who have read the trade press today, Access Live, WSWA's newly reimagined convention, has opened up for registration. So hit that link and register, and be sure to take advantage of the open registration today. Very exciting. And so we hope to see you there in April in Orlando, Florida. Okay, let's join our first holiday mixologist. You can follow along at home, or you can wait for the recipes to come in part of the follow-up package from today's webinar. They will be in your inbox. You can make them on your own time. And I also want to recognize all the WSWA Access Craft brands who have created holiday cocktail recipes that can be made with their products. Everything you see here today will be emailed to you again, so no need to take notes unless you're that person. Okay, let's go ahead. I want to introduce our first Access Craft Advisory member, Council Member Chris Paparillo of Brandy Wine Branch Distillers. Chris?
Thanks, Michael. I appreciate it. Dale and Danny, great job. My name's Chris Paparillo. I'm the president of Brandy Wine Branch Distillery. We're located in Chester County, Pennsylvania. Our distillery was founded over 6 years ago by Scott and Don Avellino. Our original brand is Revivalist Botanical Gin, which was voted best craft gin distillery for the last 3 years by USA Today readers. We also have Resurgent Whiskey, and we have some really exciting innovation in the form of two new botanical infused whiskeys that are being launched right now. We are looking for wholesalers across the U.S. If you like what you hear, give me a call. I'd like to introduce Scott Avellino, co-founder of Brandywine Branch Distillery. Thank you.
Thanks, Chris. Thanks, Michael, as well. Not a mixologist, although I play one on Zoom, apparently. I'm Scott Avellino. I am the co-founder of Brandywine Branch Distillers. And as Chris mentioned, we have the Revivalist Botanical Gins and the Resurgent Whiskeys. And I'm really excited to be here today because, Chris had mentioned that we have a new line of innovative whiskeys. And we consider ourselves a botanical spirits company. And any spirit that we produce is going to have some sort of botanical influence to it. So we took a look at our 2-year-old wheat whiskey, and we thought, how can we basically add value to this whiskey and give it a little bit more of a oomph. And we basically brought in our botanical expertise and thought that we could produce an all-natural infused, not flavored whiskey. So it's all natural, sugar-free. There's no womp, which is with other natural flavors. Everything is rooted in nature. If it doesn't exist in nature, you won't find it here in Resurgent. We use a proprietary flash infusion where we'll take barks, roots, leaves, any kind of botanicals, and we'll infuse them into the 2-year-old wheat whiskey. We partner with sustainable farmers across the country and to produce and source all the ingredients. What I have here today is our sarsaparilla, cherry bark, and licorice root is one infusion. But today we're going to make a cocktail with our coffee bean and chicory root infusion, which is a really great combination. It's a really nice combination of the coffee bean and then a nice little spice of the chicory root. Simple cocktail. It's called Mellow Christmas. 2 ingredients, and that's the beauty of these whiskeys. All the flavor is already in the bottle itself. I drink it neat, but today we're going to make a really nice holiday cocktail. So what I'm going to do is I'm going to fill up our cups with some ice. We're going to take 2.5 ounces of Resurgent botanical whiskey, our coffee bean and chicory root. We're going to do 1/4 ounce of chai syrup. This chai syrup is sugar-free. You can go with the sugar kind if you want to add more sugar or sweetener to your cocktail. I'm going the sugar-free route. And then we're going to do 4 dashes of Angostura bitters. So mix it all together. Add a little bit more ice. And then what I did was, for a garnish, I took some marshmallows on a skewer, dusted it lightly with some cinnamon, and then lightly toasted it. And there you have is a mellow Christmas.
Scott, thank you very much. All right, next
Absolutely.
up, we have Bob Gunter of Kaloa Rum Company joining us all the way from Hawaii, where Santa is known to wear board shorts. Bob, are you there?
I'm here, and Santa arrives by surfboard.
Nice.
By the way. But aloha, everyone, from the Garden Island of Kauai. I am Bob Gunter, President and CEO of Kaloa Rum Company, Hawaii's award-winning, authentic Hawaiian rum producer. All of our activities, all of our production, distilling, blending, bottling is done on the Garden Island of Kauai. We have a full portfolio of products. I like to say we have one for every day of the week. They're all very versatile, very mixable, very sippable. And today we're excited to present to you our holiday cocktail. And we have our brand ambassador and mixologist, Jennifer Bryant, on board to introduce our white chocolate peppermint martini. Jennifer, take it away.
Right. We are going to start with our Kaloa coconut rum. We're going to do 1.5 ounces. And then we're going to use our Kaloa cacao rum. This is going to be 1/2 ounce. And then we have 1/2 ounce of cream of coconut. And then we have 1.5 ounces of condensed milk. Got 1 drop of peppermint oil. We shake it out. And strain it into our candy cane rim glass. And you've got a white chocolate peppermint martini. Cheers.
Jennifer, thank you very much. That looks delicious. All right, next up, we have Sabir Singh of Miko Tequila.
Hi, how's everybody doing today? My name is Sabir Singh. I'm the co-founder and CEO of Miko Tequila, a craft tequila brand based out of Los Angeles. Just a little backstory briefly on the brand. The brand was launched in 2019 with the idea of producing a really authentic tequila from the highlands of Jalisco, reflecting Los Altos. Little background behind the partners. Juan Antonio Nunez have been producing tequila in the highlands since 1937. And my father, AJ, who's the founder of the company, was one of the former executives at Patron. Karina Rojo is our master distiller. She's one of 4 or 5 female master distillers in Jalisco right now. And again, the idea was really to produce all natural, unadulterated tequila that was, using traditional methods passed down since 1937. We've got a range of Blanco, Reposado, Añejo, and Extra Añejo. The Reposados, Añejo and Extra Añejo are pretty interesting in that they're aged in Cabernet cask. And then we also have a line of craft tequila seltzers. This holiday season, I have our mixologist, our friend Kyla Faber, who's going to take you through making a Jalisco holiday with Miko Tequila Reposado.
Hi there, I'm Kyla. So we're making a Jalisco holiday cocktail. We're gonna make it with the Miko Reposado. I love this Reposado. It's very smooth and incredibly versatile. First, we're gonna do 1.5 ounces of tequila, 1 ounce of fresh squeezed grapefruit juice, 1/2 ounce of rosemary simple syrup, where we just did equal parts sugar and water and rosemary leaves boiled for 30 minutes and let it sit, and then 1/2 ounce of fresh squeezed lime. All right. All right, and our glass is going to be a salted rim. We're going to top it off with our Miko grapefruit seltzer. And lastly, just smoke some rosemary. And this just blends all the ingredients together. It gives it a nice aromatic feel. And here we go.
All right, Kyla, Sabir, thank you very much for that. Thank you very much for attending WSWA's 2022 Holiday Trends webinar. Thank you to Danny Brager and Dale Stratton for the SipSource data and analysis. SipSource powered the reports. Again, you have all of our contact information. Thank you for the craft brands and mixologists who just created 3 reasons in about 15 minutes to make this holiday season merry and bright. And thank you for everyone in attendance who makes the U.S. alcohol marketplace the global standard. Happy selling and happy holidays.